Welcome back to Forex Trading. Today we'll be looking at Module 3, Technical Analysis and Market Predictions. This module explains how traders study price movement and use technical analysis to predict market behavior and make informed trading decisions. By the end of this module, learners should understand technical analysis and its importance, price action and market structure, support and resistance, market trends and cycles. Traders should understand the candlestick patterns and chart formations, technical indicators such as the moving average, RSI, MACD. Learners should also understand the market decision framework, the particle chart interpretation and trading decisions. Paragraph introduction. Technical analysis is the study of price movement to anticipate future market behavior. It is based on the idea that price is not random, but follows a pattern created by the supply and the demand. Charts helps trader identify the trends, reversals, and key levels, while historical patterns provide insight into future movement. Let's look at what the price action and market structure mean. Price action refers to how price moves over time, while market structure explains how these movements are organized. Price reflects supply and demand and patterns such as trends and ranges, helping traders understand market direction and behavior. What is support and resistance? Support in forex trading is a level where the price tends to stop falling and may rise. Resistance is a level where a price tends to stop rising and may fall. So support and resistance are opposite. While support is a level where price tends to stop falling and may rise. Resistance is where the price now tends to stop rising and fall. So they are opposite of each other. These levels help traders identify entry and exit position and often switch roles when broken. Let's look at a term called trend identification. A trend is the direction of the market. We have three kinds of trend. We have upward trend, we have downward trend or downtrend, and we have sideways. The uptrend, this is higher ups and higher lows. The downtrend is lower highs and lower lows. While for the sideways trend, this is price move within a range. Trading in the direction of the trend increases probability of success. What is a market cycle? You see, forex markets usually moves in circle in four various circles. It goes back and forth. It starts with accumulation. This is the point where the price stabilizes. Then you have the uptrend. The price of stocks or securities will increase. Then we have distribution. This is where price slows. Then we have downtrend. This is where price falls. Understanding circles helps traders time entries and exits, when to exit the market and when to enter into the market. We have chart analysis. Chart analysis involves studying price charts to understand market behavior. It focuses on identifying patterns and probabilities rather than predicting exact outcome. The chart analysis is when you study price charts, like you want to see what happened, what's happening in the market, what's the trend here. You want to see if there's a pattern. Okay, this stock increased today. Tomorrow, what will it look like? This cross decreased today. Okay, this chart, it's I can predict, I can make a prediction from here. So it focuses on you identifying a specific pattern of probability rather than predicting the exact outcome. The first kind of chart analysis here is the candlestick patterns. The candlestick patterns, just like the name indicates, shows price movement within a time period. We have two kinds. We have the bullish candles and we have the bearish candles. The bullish candles shows buying pressure. So when there's too much buying in the in forex markets, you will see bullish candles. While bearish candles show selling pressure. Patterns reveal market sentiment and possible reversals or continuation. Then we have chart formations and breakouts. Chart formations occur during consolidation. Breakouts happen when price moves beyond support or resistance. They signal potential strong trends and may include false breakouts. Now let's look at technical. What are technical indicators? Indicators helps analyze price data. We have three kinds. We have the moving average. This gives the trend direction. We have the ROSI. This is overbought or oversold conditions. This indicator shows that they are overbought or oversold conditions. Then we have the MACD. This shows the momentum and trend changes. If there is a trend change, it's the MACD that captures it. These technical indicators, they confirm signals, not replace price actions. Now let's look at the market decision framework. A structured process used to analyze the market and decide whether to buy, sell, or wait. It uses emotional trading and improves the consistency of the market. So a market decision framework is basically saying you want to invest in the forex market, or you need to make a right decision. So you have to check like how when should you invest, how should you invest, when not to invest, should you invest now. So these are decisions to be taken. And you cannot just take a decision based on subjective facts. You have to have a structured process that will aid you in analyzing the forex market and decide whether you want to buy. So prices are increasing. Forex market prices are increasing. Should you buy? They are decreasing. Should you sell? Or should you wait and keep your stocks that you bought? So by doing this, it reduces your emotional trading and improves your consistency. Emotional trading is in the sense that you trade impulsively. So market decision framework will help you to reduce your emotional trading and improve your accuracy. Now let's look at the decision process. First, you identify trends. We already look at trend indicators. Secondly, you locate support and resistance. Third, you analyze price behavior. Fourth, you confirm with indicators, that is technical indicators. Then you make your decision whether you buy, whether you sell, or whether you wait. So these are the decision making process when it comes to the forex market. First, identify trends. Two, locate support and resistance. I already talked about support and the meaning of resistance. Three, you analyze your price behavior. This price changes. You look at trends. Then you confirm this your price behavior with your technical indicators before you now make a decision whether you are going to buy, whether you are going to sell, or whether you are going to wait. Now, combining analysis. Strong decisions come from multiple confirmations. That is your trend plus your support or resistance plus your candlestick plus indicator alignment. They will increase your probability of success. Now let's look at the practical chart interpretation. Traders identify support and resistance zones and observe price behavior. These zones help anticipate reversals and guide entry or exit decisions. Now let's look at a market scenario. For example, uptrend plus support level plus bullish pattern plus indicator confirmation is a buy decision. I already explained what an uptrend trend is, what a support level is, what a bullish pattern is. That is buying pressure plus indicator confirmation. That is, you have checked your technical indicator and you have seen that okay, it's showing towards buy. Then this is a buy decision. Risk is managed using stop loss and take profit levels. I already explained what a stop loss is and what a take profit level is. By way of conclusion, this module has provided a comprehensive understanding of technical analysis and its application in the forex market. It has explored how price action and market structure form the foundation for interpreting market behavior, and how tools such as support and resistance, trends, patterns, and technical indicators help traders analyze price movement. At the end of this module, they say 15 MCQs question to be answered and a report to be written to test and understanding of this module. I'll see you in the next module.